It's December 12th, JLD here, and welcome to MSTR Today and the Treasury Titans. Nothing in this video is financial advice, but guess who is back in New York? Michael Saylor kicking back and just reading the newspaper that Bitcoin keeps climbing. If you don't believe so, zoom out, zoom the flip out, because we have a lot of work to do. And speaking of work to do, guess the bank, says Michael Saylor. What bank could Michael Saylor be in? Well, doing a little AI photo sleuthing, it appears that Michael Saylor might be storming the gates of JP Morgan. Time will tell. I mean, who knows? Jamie Dimon might be taking this photo for all that we know. I mean, think of the laughable turn of events that only Michael Saylor could pull off. But man, what a beautiful shot. I mean, New York City is just incredible from above. I absolutely love that city. I used to live there back in 2008, 2009, up in the Tribeca area. Loved it. Such a walkable city. So much fun. Adam says, it's almost like Bitcoin on the balance sheet is a great idea. And this is a little image of profit per employee strategy versus Magnificent Seven plus Walmart's. So here we go. Obviously, strategy is dominating this game by quite a long shot. NVIDIA is the only one that can even sniff them and is barely sniffing them, by the way. Zinc says, Metaplanet is the most undervalued stock in the world. One, lowest cost of capital in the world for accumulating Bitcoin. People pay 5% for their mortgages. Metaplanet pays less than that to buy Bitcoin. Two, at 1.1 MNAV, the risk of underperforming versus Bitcoin is very low. Three, you get to benefit from a team of super smart financial engineers that will accumulate Bitcoin while you sleep. The NAV floor is constantly rising. The share price is rising at 1 MNAV. Incredible opportunity as Metaplanet has another great day that will be soon reflecting in the U.S. markets to close out the week. Mike Alford says, Bitcoin showing quiet strength, massive accumulation happening under the surface. It is bubbling. All the smart minds know it. Strategy Maxi says, volatility is not for the faint of heart. MSTR is an amplified Bitcoin play. If you believe in Bitcoin, then MSTR will go to the moon. If you are Peter Schiff, then MSTR goes to zero. I say MSTR will go to Mars. And here's MSTR, Wall Street's most divided stock. Analysts split between 71% crash and 241% moonshot. What will happen? Only time will tell. Let's check out Chris, who says Saylor likely knows something. That's why he issued $1 billion in equity at a 1.15 MNAV last week. He's front running. It will become obvious in 2026. It will become obvious in 2026 what is about to happen. Wow. And by the way, Chris, 1.4 million views. Very impressive, my friend. Good stuff. Keep rocking it. Jeff says, we're on the brink of a global monetary paradigm shift where the incentive is monetary control of the new world order. Digital capital, credit, money, and banking are all multi-trillion-dollar ideas up for grabs for those with the most courage. Have you ever seen sovereign FOMO? You're about to see sovereign FOMO as Michael Saylor just went all around MENA, that's Middle East, North Africa, spreading the gospel that is Bitcoin. Strategy Maxi says, you can see the rotation from the weak hands to the strong hands. I'm not sure why Bitcoin isn't 200,000K now, because companies won't sell as early adopters would. Markets are ignoring this trend. They should hold Bitcoin or MSTR. That's why I continue to buy and hold MSTR. I will be rich. Do you want to be rich? And we look at the Bitcoin treasury, the treasury balance of companies, and this is just an insane chart if you take a second to step back and look at it, because one thing is not like the other. Good morning, everyone, says Bitcoin Archive. Yesterday's FOMC presser was the most dovish since 2021. Bloomberg. QT ended December 1. Fed will buy $40 billion in T-bills over the next 30 days. Coinbase advisor Hassett will replace Powell in 2026. And we all know what Hassett's going to do. He is just going to lower, print. All tailwinds for Bitcoin despite the suppressed price action. Boom. And this was a great post by Jack. I want to just kind of sit back, relax, and enjoy this because he shares that Saylor just pitched to Arab sovereign funds in Abu Dhabi. He opened and closed with one message: President Trump and his administration are all in on Bitcoin. Saylor also straight up name dropped the Rothschilds and mentioned how they built empires with gold-backed credit. At the end, he pitched a $20 trillion bank idea, a Bitcoin-powered bank offering high-yield accounts through Bitcoin-backed credit products. He revealed what the big boys in Bitcoin are building and what the end game looks like, and how it makes more sense why JP Morgan is attacking Strategy. Strategy is coming for the old banking system, although Saylor mentioned JP Morgan and other banks as potential partners. Saylor's speech also confirms what I've been repeating. Bitcoin is now a political asset. From the moment Trump won the election a year ago, Bitcoin's price action has been tied directly to the political landscape. That's why we all need to be aware of the fact that until companies like Strategy, Strike, 21 Strive, and even Tether become systematically important financial institutions, aka too big to fail, the entire Bitcoin-based system remains exposed. As long as crypto isn't cemented into law, a political shift can break the Bitcoin-backed system. That's exactly why this administration is pushing a pro-Bitcoin legislation through Congress, and it's why political events will trigger the next major moves, passing a crypto market structure bill, treasury actions involving Bitcoin and gold, but it works both ways. The next Bitcoin drawdown may come from political side too. For example, if Trump-aligned candidates lose the midterms next year and the GOP loses the House, if this gives you a new perspective and you want to connect the dots with me, follow him right there, Jack Sage _. And then, of course, drop a like and a repost because this guy is dropping value. Boom. Very good post. And now we are going to move on to an incredible little snippet, a little chat that Michael Saylor has that you're not going to want to miss. So sit back, relax, enjoy your Friday. Michael Saylor just made an $835 million bet buying the Bitcoin dip. Right now, Bitcoin's fallen almost 40% off its October high, and the big money is buying the dip. What's your strategy? Now might be a great time to convert your IRA or 401k to Bitcoin with the help of Bit IRA. Plus, you can fund it with pre-tax funds, then continue to invest it over time as you do any other retirement accounts. Bit IRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and registered with the U.S. government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Bitcoin has proven time and time again to rebound, every cycle going from a higher low to a higher high. With Strategy's latest purchase, Michael Saylor clearly believes Bitcoin is at a discount. Time for you to get in too. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin. When you're ready to build your complete business identity, you want to do it fast and right. With Northwest Registered Agent, you can build your business identity in just 10 clicks in 10 minutes. When you want more, start your business with Northwest. Everything you need to launch and protect your business all in one place. Your business identity isn't just your logo or website, it's everything that represents you, from what customers see to what they don't, legal filings, state licenses, secure domains, and compliance tools. Northwest gives you more privacy, more tools, and more guidance so you can focus on growing your dream. For nearly 30 years, Northwest has helped entrepreneurs like us build confidently. You can form your business for just $39 plus state fees, backed by real corporate guides, people who know your state's laws and have your back every step of the way. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks in 10 minutes. Visit www.northwestregisteredagent.com/paidJLD and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/paidJLD.
What we're doing is transforming digital capital to digital credit. And we've done it and created these various digital credit offerings. Strike is structured Bitcoin. It pays you a yield and gives you upside while you wait if you want the best of both worlds. Stride is super high yield, long duration credit. It's actually paying 12.9% effective yield right now. If what you want is max cash flow, then you would want something like this. Strife is super senior credit. So it's senior in the capital structure, has the most governance rights and liquidation preferences. It pays less. If you want investor protections, you get 9%. If you're willing to waive them, you get 12.9%. there are two different sets of investors. The investors that buy the one won't buy the other. We created both of them intentionally. Stretch is the most advanced instrument. What we did with Stretch is we wanted to create a high yield bank account where it would hold principal around $100, very, very close to that, and then would pay out a dividend every month. In order to do that, we had to make it adjustable every month. And so this is the first example of a treasury credit instrument issued in the industry. In fact, it's the first instrument of its time ever issued in the history of the capital markets. Nobody ever created a variable rate preferred equity until we did it. The reason we were able to do it is we had digital capital. You can't do it without digital capital. We had digital intelligence. I designed this with AI. It never would have come to market if I didn't have AI, because the lawyers told us they'd never done it before. The bankers said, we've never done it before. Everybody else said, it's never been done. It can't be done. It won't be done. And I said, well, the lawyers and the bankers say it can't be done. Can it be done? The AI said, yeah, of course it can be done. It's very straightforward. Do this and this and this. And so I basically fought and then convinced. You can convince people, you just need to have a lot of intelligence on your side. So we use modern technology to develop this. And I'll show you how it turns out. The fifth thing we did was Stream. We created a Euro version of Strife. So if you're a Euro investor, you don't want European currency risk. You want to be paid in euros and you want Euro par value. So we launched that about a month ago. This is Stretch for the past 5 months, or since August 1st. You can see it came out just around 90. It's up around 97 right now. We've adjusted the dividend. Now I want to show you, I'm going to show you the difference between capital and credit here. That is Stretch versus Bitcoin. If you had $100 and you bought $100 of Bitcoin on August 1st, you would have lost $27 in the past 5 months, and you get no dividends. If you had bought Stretch, you would have made $7, and you would have collected $3.70 of dividends. So you look at that and you say, well, the Stretch investors did very well. In a bear market, the credit investors outperform the capital investors. Well, why does anybody want to buy Bitcoin? Well, because Bitcoin's up 50% a year for the past 5 years, and you're only going to get 10.75% on Stretch in steady state. But you're going to have to stomach the drawdowns, the roller coaster, if you want the capital. Again, ergo, if you have a 4 to 10 year time horizon, you should take the capital. But if you need the money in 4 months, 4 weeks, 4 days, or less than 4 years, or if you're risk adverse, you should take the credit. And you can see it takes a company like ours. You need a treasury company to strip the volatility and the risk off of the capital to get to the credit. That's what we're doing. And we're doing it increasingly aggressively now. This entire digital credit category we created in January. You can see it's gone from nothing to nearly $8 billion in 9 months. You can see liquidity is off the charts. This is the trading in those digital credit instruments. And this is per day, so sometimes you're getting 400 or 500 million in a day, or 400 million. Let me put this in perspective. The average preferred stock is listed over the counter, trades 100,000 a day. The typical public preferred stock that's successful, that is taken public, trades $1 million a day. The first securities we created, our first digital securities like Strife and Strike and Stride, they were 30 times more successful than that out of the box. They're trading 30 million a day. And then we finally got it right with Stretch, and we created the instrument everybody wants. It's trading 140 million a day. 100x, right? How do you know something's working? It's 100 times better. And then we stumbled on something. Necessity is the mother of invention. We stumbled upon this observation that if you actually fund the dividends by raising capital, either through equity or through the derivatives market or the BTC market, then the dividends you pay are return of capital, which means they're tax deferred, which means you don't have to pay the tax on them. And this is profound, right? We created a way to pay you dividends where the dividend tax rate is 0, not 20, not 30, not 50%. And of course, the company then sells the credit to buy the Bitcoin to create this amplification. So if you're wondering, why does the equity have value? The equity has value because we're able to create the credit. And the more credit we sell, the more BTC yield we generate, the higher the equity value will be.
What's the second best? There is no second best.